Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Dave Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He's speaking to us from the Bahamas. He's also a writer for the Financial Intelligence Report. David, welcome back.
Thanks for having me. It's been a while. I don't think I've been on House Street for a number of years, so it's good to be back.
David, you're in the Bahamas. How did you fare with the hurricane?
Well, first of all, I want to apologize if my end is not that great on the audio because I'm actually doing some renovations on my house. So the guys are working inside, and it's a breezy day today, so I'm outside talking on the phone. So that I will apologize for that, but I think it should be fine. Here we did okay. One thing about hurricanes is people just see, like a hurricane hit somewhere, and they have this idea because they hear like, it's got 180 mile per hour winds or something, that the whole area got affected like that. But it's actually only what's called the eye wall, which is an area usually like 25 to 50 miles within the center of the hurricane that gets those top winds, and then it really drops. So we were about 100 miles south of where that eye wall was, and here it was like 50 to 60 mile per hour winds at most. Mostly like 30, 40. So it's kind of like a tropical storm. And that's like kind of storms you get in BC or Ontario or places in Canada all the time. So here, it wasn't a big deal. We lost power for a day, and we just got, because when the storm just stacked there over Grand Bahama, we did get a few days of pretty heavy rain. So that happened. And, up there. So, but the problem was the actual island that got hit, Abaco, was devastated because what it did was when the hurricane veered into the Atlantic and then veered to the west and went over Abaco, those waters in the Atlantic are deep and they're warm, which is the worst combination. And there was no wind shear, there was no fronts kind of hitting it to slow it down. So it just was kind of like the quote unquote perfect storm, and it really picked up steam. And I knew it was going to be back because in 1992. Hurricane Andrew actually hit the island that I live on now in kind of a similar way, that when it made that turn and went over the Atlantic, it just turned into a monster Category 5. And one problem in Abaco, as opposed to where I live in Eleuthera is one of the few islands in the Bahamas that's hilly. Like, I live on top of a 120-foot hill, which, by the way, in the Bahamas is like a mountain. Like, the highest point in the Bahamas, I think, is only like 180 feet. Most of the islands are flat. So when it came in, it was almost like a tsunami. It brought everything with it from the ocean. And because the island was low, it just washed, the 20, 30-foot storm surge. Where I live, I would never see that, but on top of this hill. But in Abaco, you would, it's just going through the whole island almost. So, it just flattened everything. And the building code here is pretty good. Most stuff is on concrete. And, my house has been through a couple Category 3s and done fine. So that was just like brutal. Like, and then also there was there's a Haitian shanty town, near Marsh Harbor. That's really the main town in Abaco that got hit. And I think that shanty town got totally wiped out. And they have kind of an unofficial death toll. Like right now the official death toll is like 76, and they say 200 or 300 more people are missing. But it's probably really between 1,000 and 2,000 people, because the Haitians that were in the shanty town got totally flattened, and there was like no place for them to go. So it was pretty bad here. Usually the Bahamas if you always look at how hurricanes hit, because of the high standard of the building here, usually we make it okay. You'll see, and Bahamians do pretty good in terms of they know not to go out, they stay in when the hurricane's coming over. They don't do stupid things like driving around or whatever just to see the storm while it's going on. So, but that is probably the worst hurricane that ever hit here. And a similar hurricane hit Abaco, the same island, in 1932. and kind of wiped it out back then. So I'll start and end with this. So what I've been doing the last few months is there's a charity in Abaco called Head Knowles, and if you go to their GoFundMe page, I sell a lifetime subscription to my newsletter for $1,000 US. So if you go buy that lifetime subscription and then write me at addictedtoprofits@hotmail.com or davidskarica@gmail.com, what I will do is I'll give you a lifetime subscription and just show me like the proof that you did that. And of course, I'm getting nothing from that. It's just all totally going to the charity. And the great thing about that charity, just to quickly end, is that they're like a local charity that's on the ground. So yeah, the Red Cross and the Salvation Army, they all do great work. But the great thing about this charity, it's like run by Bohemians. They know how to work with the local government. They're kind of on the ground. You know, they know how to deal with the political situation, which always can be a problem, getting, help to the local people. So that's why I really like this Head Knowles organization. And also, with a lot of these big charities, they have a lot of bureaucrats, they have a lot of red tape, they have a lot of top-end costs. They have very limited costs,
So, David, the storm that the rest of the world is looking at is happening on the major stock markets right now. The coronavirus is blamed, but were the major markets already set up for a major decline because they'd been climbing, setting record highs for the past year?
Yeah, I think it's not only that, it's the way they went up. If you go look at 2018, when there was a couple of very sharp corrections, and you can even consider it a mild bear market, when the market actually almost dropped 20% from January to December of 2018, it's very similar, that the markets really got hot in the fourth quarter. They're going up every day. A lot of these speculative stocks, and I mentioned to you off air about these, like Space, which is Virgin Galactic, that's Richard Branson's company, Plug Power, which has been around forever. I call them or Tesla, I call them kind of like story plays, and they all went completely parabolic at the end of the fourth quarter and into January and February. And that to me was a sign that you were getting near the end. If you look at the 992000.com blow off, a lot of the smaller internet stocks that were actually based in Canada, like mining companies that became telecom or .com companies right near the end of that bubble, a lot of these little 10-cent stocks went to like $1 in that last few months, and that was the end of the speculative mania. So I think a lot, again, these story stocks and speculative stocks going parabolic like that. And if you look at a lot of companies, it's not just those speculative stocks, it's Amazon, Apple, something called Transdigium, that's a TDG is the ticker. These stocks all on the 10-year charts are absolutely insane. Straight up parabolic. Domino's, which is a pizza company, same thing. And I just think that is a sign that this market is very later in the game. And just two examples, just before we move on to something else or talk about something else. There's two simple indicators. One is price to sales, and the other is market cap to GDP. Market cap to GDP is the size of the market compared to the size of the economy. It's Warren Buffett's favorite indicator. It actually went above where it was in 2000, which is the previous all-time high. And then price to sales, which is obviously the price of the company to the sales, which typically trades around 1 to 1.5 times. Companies trade at compared to their sales. It's gone to 2.5 times, which again, it's higher than what they were in the .com bubble. So we are like in the 99th percentile for most valuations. The price to earnings don't look bad, and the reason that is companies have bought back so much stock, they've reduced the number of shares outstanding, which kind of makes the PE look better than it is. But you can't hide sales. You need sales. You need top-end growth, right? You can't hide, the price of stocks compared to the size of the economy. So I think we're really, really close. And I got bearish in 2015, 2016 when there were a couple corrections. And then I kind of took off a lot of those trades the last couple of years. And last year I had almost no shorts heading into the fall of 2019, which is almost unheard of for me. But I really think now we are in the latter stages. Now, right now, currently, we are very oversold. The VIX is over 30. The market has seen a very sharp correction from this most recent high. So I think at some point you're going to see some kind of reversal. Now there's a 72% chance that the Fed will again cut rates in March. And that was almost like no chance just a few weeks ago. So I think the Fed might step in and do something in the short term here. So I do think we're probably near some kind of bounce. But my opinion right now is that bounce should be sold into, and that bounce is probably just a dead cat bounce. And if you're someone who's a more active trader, probably a bounce you can short stocks on.
We'll have more with David Skarica right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with David Skarica. David, what do you think is going to happen with gold given the equity market situation right now?
Well, we've seen a major, I think, breakout in gold. If you look at gold, if you just looked at the chart of gold for the last 10 years and looked at the 2013 to roughly 2019 period, and you didn't know what it was. It could be a stock, it could be a commodity, it could be whatever, right? Whatever you thought. But just that chart alone is one of those bullish charts I've ever seen. There's a saying in technical terms called, the longer the space, the longer the base, the more the space. So the longer something kind of builds a base for, the longer, and bigger the breakout usually is. Well, gold built this huge base between 1050 and roughly 1400 to 1450. And most of that base was between about 1100 and 1350, for 6 years, which is one of the longest bases I've ever seen in any market, in any commodity, in any asset. So I think the fact that it's about to break out here, or has broken out, and we're at 1650 or so, means that longer term, we're in that massive breakout. It makes sense, because if the Fed's going to start cutting rates and printing money, and more liquidity now needs to be added because of the coronavirus and all these worries over economic growth globally, that is going to be excellent for gold and precious metal prices. And so that's longer term. But the short term, the problem is when you get these equity sell-offs, like in 2008, gold stocks crashed with the market. I don't think that's going to happen, because what happened was from 03 to 07, gold stocks rallied with the market. Well, they have not rallied with the market. This is much more similar to the late 90s or early 2000 period, where gold stocks were actually trading inversely with the market. They fell in the late 90s while the market blew off, and then they rallied from 2000 to 2002 during the bear market. But you go look at that bear market, when the selling got intense, like in late 2000, like in mid-2002, right near the bottom, gold stocks usually got whacked because they are equities with the rest of the equity market. So we could see gold stocks lag for a little bit as this kind of first stage of the washout occurs in equity markets. But what will happen, if it is they're kind of bottoming and rallying while the market is dropping, what will happen is when the market rallies, the gold stocks will really outperform, and they'll continue to go up over the long duration of a potential bear market. So, and even if they keep cutting rates, even if the market say this is just some correction and goes to new highs, the gold stock should go higher as well. And part of one of the reasons I'm not that bullish on the market, and I think this is maybe the start of a bear market, is everyone I talked to had this belief, like a few weeks ago or a month ago, that Trump was somehow just going to be able to keep the market up into the election to get reelected. And I'm telling you, everyone I knew, even the people that don't like Trump, even the people that aren't long-term bulls in the market, were saying the same thing. And one reason I took my shorts off last summer was all these people I was talking to were looking for a crash in the fall. They were looking at a year ending in 9. They thought it could be like 29. And I was just like, well, if everyone's looking for this crash, it's probably not going to happen this fall. But you didn't. So now I'm kind of thinking, no, I think the market is actually going to roll over into the election. It doesn't mean it has to be a huge rollover. It could be like 2000 when it slowly rolled over into the election. 2008, it rolled over into the election as well. So I just think that now, no, the bubble just went too far, and I don't think even, maybe there'll be some rallies. The Fed is going to try to prop things up, but I don't think you're going to be able to move the market higher, which is, I think, going to be good for gold and precious metals. So what's going to happen in these market declines is during the initial part of the decline, like we saw the last few weeks, gold will really do well, and then it might get taken down in the equities, gold equities, during the kind of selling climaxes. But over the full length of a potential bear market, they should go much higher, especially because you have to look at the fiscal situation. There's $1 trillion deficit, 5% of GDP in the States. They're going to have to monetize that debt if there's a downturn in the economy. So there's all these things that, China, ever since Corona hit there, all they've been doing is printing money and pumping it into the economy there. So all these things potentially can definitely happen in the next, few months and years.
We'll have more with David Skarica right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, what do you see happening with the U.S. dollar?
Here's what's interesting about the dollar. There tends to be the trade where dollar is tightening liquidity around the globe, and it rallies. If you go look at most of the 2000 to 2002 bear market, the dollar stayed strong, but it did start to roll over in 2002 to 2003, right near the end of the bear market. In 2008, the dollar had a big rally. So that rally was coming off an extremely depressed level. I remember going in 2007 to New York City, and that's when the euro was over 150, and there were just Europeans everywhere, all over the city, because, it was so cheap for them to travel to New York, right? So, that's one thing people, I think, forget about 2008 when the dollar rallied, was it was so, oversold. And see, back then there was a trade on, and this is where I'll come to my opinion on the dollar now. The trade was people were short the dollar, and they were long everything. Emerging markets, gold, the U.S. markets, everything. So they were kind of doing this pair trade where, if the dollar goes down 10% and your assets go up 10, 20%, you actually make 20 to 30% on that trade. And then when everything collapsed, they had to reverse that trade. What I find interesting about the sell-off this past week was the dollar did not rally like many of the bears expected. The dollar actually went down against the euro, and the dollar's down quite good today on a day when the Dow is down 600-700 as we're speaking. So what I think has gone on is that dollar trade is not the flight to quality trade right now. I think what's happened is where in 2007, people were short the dollar and long risk assets because the U.S. economy has outperformed and the U.S. markets have outperformed. People are actually long the dollar and short the euro and long risk assets. So if they reverse those trades, that means they're going to actually buy the euro back, cover the dollar longs by selling, and sell the risk assets. So I got a feeling this time around, you're going to see the dollar fall with the market. And another part of that as well is Europe is 0% interest rate. Japan is at 0% interest rate. So, the U.S. still has some interest rates, about 1.5 on the Fed funds rate, about 1.5 on the 10-year bond, which historically we would say, it's actually 130, we would say is nothing. But when Germany's 0.5%, when Japan's near 0, that actually is something. Well, to me, the only way if those rates go down and they cut rates to 0, and then the 10-year bond goes under 1%, well, that kind of again loses some of the appeal for the dollar. Because why would people buy dollars right now? They'll be like, at least I can get 1.5 or 2% on a 10 or 30-year bond in the U.S. and Germany, I'm getting 0.5%. Well, if all of a sudden that enticement goes away, they're going to sell dollars because then they're just going to be like, well, now the dollar is just like everything else. It's yielding 0.5%. So I think that ultimately in this phase of the market is where we're headed. And I think that could really, hurt the dollar as well. So even if the dollar continued higher, it would be a slow grind. It'd be more like 01, 02, and then it would fall. But I think actually we're probably topping here, and it will roll over. And of course, remember, gold has done very well despite that strength in the dollar. So imagine what gold can do. And I got, like it did, for example, in the 2002 to 2007 period, when it went from, 300 to 1,000 an ounce when the dollar is weak. So, I think that everything's kind of lining up. And remember, one thing about when people talk about the dollar versus vis-a-vis the euro, remember, despite the fact that a lot of European economies are weak, Europe has a trade surplus. Europe has a current account surplus. The U.S. has a huge trade deficit, huge current account deficit. And most of the European countries right now are 1 to 2% of GDP on their deficit. The U.S. is 5%. So the U.S. is so fiscally fragile now, you get some kind of recession, it's going to go to 10%, which is, that's third world banana republic stuff.
David, thank you so much for being on the show.
Oh, thank you for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He was speaking to us from the Bahamas. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.